There is a phone call being made right now, somewhere between Tehran and Dubai. A merchant speaks a single code word. Within hours, money appears on the other side of the world. No bank transfer, no digital footprint, no paper trail. The money has moved, but nothing has actually moved at all. This is Hawala, an invisible financial system older than most nations, more resilient than most currencies, and more elusive than any blockchain. It operates in the margins of the global economy, yet handles billions of dollars each year. For Iran, cut off from international banking networks by decades of sanctions, Hawala is not just an alternative to Western finance. It is the lifeblood of survival, the architecture of resistance, and a window into a profound truth about human nature: that trust between people can outlast, outsmart, and outmaneuver the most powerful institutions on Earth. To understand how this works, we need to start with what Hawala actually is, because the moment you grasp its mechanics, you realize we've been looking at money all wrong. Imagine you're standing in a carpet shop in Tehran. You need to send $5,000 to your cousin in London. The formal banking system is closed to you. International wire transfers are impossible. Western Union doesn't operate here. Credit cards don't work across borders. You are, by every measure of modern finance, trapped. But you're not trapped at all. You simply speak to the carpet dealer. You hand him the equivalent of $5,000 in Iranian rial. He writes nothing down. He makes a phone call. He gives you a code, perhaps a string of numbers, perhaps a phrase. Your cousin, in London, walks into another carpet shop, speaks the code, and walks out with $5,000 in British pounds. The entire transaction takes hours, costs a tiny fraction of what a bank would charge, and leaves absolutely no trace that regulators can follow. This is not magic. This is Hawala. The word itself comes from Arabic, meaning transfer or trust. It is a system built not on contracts, but on honor. Not on institutions, but on relationships. Not on ledgers that governments can audit, but on memories and reputations that only insiders can verify. The carpet dealer in Tehran doesn't send your money to London. He never touches a bank. He simply calls a colleague in London, someone he has known for years, perhaps decades, someone whose family has done business with his family across generations. That colleague in London pays your cousin out of his own funds. Now the London dealer is owed $5,000 by the Tehran dealer. But this debt is not recorded in any formal sense. It exists as an obligation, a bond of trust that will be settled eventually through reverse transactions, through trade goods moving the other direction, through the natural ebb and flow of commerce. Settlement in Hawala can take months. It can happen through carpets shipped from London to Tehran, through gold moved in the opposite direction, through 1,000 small transactions that balance the scales over time. The system works because betrayal is unthinkable. If the Tehran dealer cheats his London counterpart, word spreads instantly through the network. He is finished, not just in London, everywhere. His reputation, the only collateral he has, is destroyed. And in a system where reputation is everything, destruction of reputation is economic death. This is not a modern invention. Hawala predates Islam. It predates Christianity. Its roots stretch back to the Silk Road, to the ancient trade routes connecting China and India and Persia and Arabia and the Mediterranean. Merchants moving along these routes faced a brutal problem. Carrying physical currency was an invitation to robbery and murder. The roads were dangerous. Bandits thrived. Armies looted. So merchants developed a solution. They created networks of trust. A trader in Damascus could deposit gold with a broker, receive a token or a letter of credit, travel for months across deserts and mountains carrying nothing of value, and redeem that token for goods or currency in Chang'an. The system required no government oversight, no central authority, no enforcement mechanism beyond the shared understanding that cheating would mean exclusion from the network, which in a world built on long-distance trade meant ruin. For centuries, Hawala simply was the way money moved across distances. It was not alternative finance. It was finance. The banking systems that dominate today, the institutions we think of as normal and inevitable, are actually the historical anomaly. For most of human history, money moved through relationships, not regulations, through trust, not laws. And in many parts of the world, this never changed. When European colonialism imposed Western banking structures, Hawala adapted, operating in parallel, invisible to the new authorities. When nation-states formed and tried to control currency flows across borders, Hawala slipped through their fingers like water. Which brings us to Iran. Because if you want to understand why Hawala matters in the 21st century, Iran is the perfect case study. It is a nation that has been systematically severed from global finance, not by choice, but by force. And in that severing, the ancient logic of Hawala has become not a relic, but a necessity. The story begins in 1979, when the Iranian Revolution overthrew the Shah and replaced him with an Islamic republic. The hostage crisis followed. American diplomats held for 444 days. Diplomatic relations shattered. What started as a political rupture became an economic siege. The United States imposed sanctions. Europe followed. Over the decades, these sanctions expanded, tightened, metastasized into a comprehensive blockade designed to strangle Iran's economy and force political change. The most devastating blow came in two waves. In 2012 and again in 2018, Iran was disconnected from SWIFT, the Society for Worldwide Interbank Financial Telecommunication, the network that allows banks around the world to communicate and transfer funds. Being cut off from SWIFT is like being exiled from the financial internet. Iranian banks could no longer send or receive international payments. Companies could not pay for imports. Exporters could not receive payment for oil. The Iranian rial collapsed. Inflation soared. From the perspective of Western policymakers, this was the intended effect. Economic pain would lead to political pressure. The regime would either change its behavior or collapse. But something else happened instead. Iran adapted. And the mechanism of adaptation was Hawala. Estimates vary, because by its very nature Hawala is invisible to official statistics. But researchers believe that between $10 and $50 billion move through Iranian Hawala networks every year. To put that in perspective, that's roughly equivalent to the entire GDP of a small nation, flowing through informal channels that leave no records regulators can trace. This money is everything. It is Iranian expatriates sending funds to family members back home. It is businesses paying for imports of medicine, machinery, food. It is the government itself, moving money to fund operations abroad, to support allied groups in Lebanon and Iraq and Syria and Yemen, to bypass sanctions and keep the state apparatus functioning. Hawala became the shadow banking system that allowed an entire nation to survive economic warfare. But how does this actually work at scale? Because handling billions is not the same as handling thousands. The mechanics remain the same, but the infrastructure becomes vastly more complex. Iranian Hawala networks are not random. They are organized, hierarchical, deeply embedded in diaspora communities around the world. Hawaladars, the brokers who facilitate these transactions, are often people with legitimate businesses that provide cover. They are merchants, yes, but also jewelers, import-export dealers, money changers, restaurant owners. They operate in Istanbul, in Dubai, in Kuala Lumpur, in Toronto, in Los Angeles. These are cities with large Iranian populations, cities where trust networks can be maintained through family connections, religious affiliations, shared language and culture. The typical Hawaladar is not a career criminal. He is a respected member of his community. He prays at the local mosque. His children attend the same schools as his clients' children. He has been in business for decades, and his father was in business before him. This social embeddedness is not incidental. It is the entire point. Trust in Hawala is enforced not by courts, but by reputation, and reputation only matters in communities where everyone knows everyone, where gossip travels fast, where social shame is a real and powerful deterrent. From a psychological perspective, Hawala taps into something fundamental about human cooperation. Game theorists have long studied the problem of trust in the absence of formal enforcement. The classic thought experiment is the prisoner's dilemma. Two people are arrested. Each is given the option to betray the other or stay silent. If both stay silent, both get light sentences. If both betray, both get heavy sentences. If one betrays and the other stays silent, the betrayer goes free and the silent one gets the maximum penalty. The rational move, if this is a one-time game, is to betray. But real life is not a one-time game. It is an iterated prisoner's dilemma, where you will interact with the same people again and again. And in iterated games, cooperation becomes rational. Betraying your Hawala partner might give you a short-term gain, but it destroys your ability to ever participate in the network again. The cost of betrayal calculated across a lifetime of lost transactions, far exceeds any single theft. This is the same logic that allowed Quakers to dominate banking in 18th century England. Quakers were a religious minority, socially marginalized, but tightly knit. They could not swear oaths, which meant they could not participate in many official institutions. So they built their own. Quaker merchants trusted other Quaker merchants implicitly because the community would ostracize anyone who cheated. This created a competitive advantage. Quaker banks could operate with lower transaction costs because they did not need expensive legal enforcement. Trust was cheaper than contracts. The same principle governs the diamond trade in Antwerp and New York, where Jewish merchants exchange millions of dollars in gemstones with a handshake, because the insular nature of the community makes fraud unthinkable. The same principle governs Chinese business networks bound by guanxi, the intricate web of reciprocal obligations that operates entirely outside formal legal systems. What all these systems share, what Hawala shares, is the deliberate construction of social capital as a substitute for institutional capital. And here is where Hawala becomes not just a financial mechanism, but a form of encryption. We think of encryption as a modern, digital phenomenon. We think of it as mathematics, as algorithms, as computer science. But Hawala is encryption through culture. The network is impenetrable to outsiders not because the information is scrambled, but because the information exists in relationships that take years to build. A Western intelligence agency can intercept communications, can surveil transactions, can plan informants, but it cannot easily penetrate a network where trust is inherited across generations, where language and religion and kinship create barriers to entry that no amount of money can breach. Hawaladars use code words. Yes, but these codes are not sophisticated. They are simply phrases that change frequently, known only to the parties involved. Transactions are recorded, sometimes, but in personal notebooks, in languages that blend Farsi and Arabic and Urdu, in scripts that are never digitized. Settlements happen through trade that looks entirely legitimate on paper. A carpet shipment from Iran to Turkey. A gold shipment from Dubai to Tehran. These goods have real value. They move through legal channels, but they are also balancing the invisible ledger of Hawala debts. From the perspective of law enforcement, this is a nightmare. After the September 11th attacks, when the United States became obsessed with tracking terrorist financing, Hawala became a primary target. The USA Patriot Act expanded surveillance powers. The Financial Action Task Force, an international body, began pressuring countries to crack down on informal money transfer systems. Hawaladars were arrested. Assets were frozen. Regulations were tightened. And the result was predictable. The system adapted. Transactions became smaller, more frequent, harder to detect. Brokers rotated more often. The network became more decentralized, more resilient. This is the fundamental asymmetry of the conflict. Centralized enforcement requires visible targets. It requires transactions that can be monitored, ledgers that can be audited, digital footprints that can be traced. Hawala has none of these. Every crackdown makes the system more cautious, more opaque, but it does not destroy it. It cannot destroy it because the system is not an organization. It is a practice embedded in culture, sustained by incentives that enforcement cannot eliminate. As long as there are people who need to move money across borders, and as long as formal channels are either unavailable or prohibitively expensive or untrustworthy, Hawala will persist. But there is a darker layer to this story, one that creates genuine moral complexity. Because the same networks that allow an Iranian mother to receive money from her daughter working in Germany, the same networks that allow a small business in Tehran to pay for imported medicine, these same networks also move money for groups that the West designates as terrorists. Hezbollah in Lebanon. Hamas in Gaza, militias in Iraq. The Islamic Revolutionary Guard Corps, Iran's most powerful military entity, is alleged to operate its own parallel Hawala systems, funneling money to proxies across the Middle East. The infrastructure is inseparable. You cannot shut down the channels that fund militancy without also shutting down the channels that fund ordinary people trying to survive under sanctions. This creates an ethical dilemma with no clean resolution. If you are a policymaker in Washington or Brussels, you see Hawala as a threat, a mechanism that allows adversaries to evade financial pressure and fund violence. If you are an Iranian family in Tehran, you see Hawala as a lifeline, The only way to access money from abroad when your government's policies have made you a pariah in the global financial system. Both perspectives are true simultaneously. The cancer patient in Tehran who needs money to pay for chemotherapy is using the same system as the weapons smuggler in Beirut. The money flows through the same brokers, settles through the same trade routes, relies on the same trust networks. And here is where we must step back and ask a deeper question. What does the existence of Hawala tell us about the nature of power and control in the modern world? Because for all the surveillance technology, for all the international cooperation on financial regulation, for all the sanctions and blacklists and enforcement actions, informal networks continue to thrive. They thrive not in spite of crackdowns, but often because of them. Every time a formal channel is closed, demand for informal channels increases. Every time a government tries to control the flow of money, it creates incentives for people to route around that control. This pattern is not unique to Hawala. It is the same pattern we saw during Prohibition in the United States, when banning alcohol simply created a massive black market that enriched organized crime and made drinking more dangerous, not less common. It is the same pattern we have seen in the war on drugs, where decades of enforcement have failed to meaningfully reduce drug use, but have created sophisticated trafficking networks and empowered cartels. It is a pattern that repeats across history whenever authorities try to suppress behaviors that people are determined to engage in. The question is not whether people will find a way around the rules. They will. The question is whether the costs of enforcement outweigh the costs of allowing the behavior to continue in a regulated, visible form. But Hawala is not confined to Iran. It is not even primarily about Iran. Iran is simply the most prominent example of a nation using Hawala at scale to survive geopolitical isolation. The system is global. It is vast. It is foundational to the lives of hundreds of millions of people. Consider Somalia, a country that has not had a functioning central government for decades, a country where formal banking barely exists. Yet Somali Hawala networks are among the most sophisticated in the world. Somalis make up a tiny fraction of the global population, but they send and receive remittances at a higher per capita rate than almost any other diaspora. Money moves from Somali communities in Minnesota and London and Stockholm back to Mogadishu and Hargeisa, sustaining families, funding businesses, keeping the economy alive in the absence of state institutions. Without Hawala, Somalia would be even more desperate than it already is. Or consider the Pakistan to Gulf corridor. Millions of Pakistani laborers work in Saudi Arabia, the United Arab Emirates, Kuwait, Qatar. They send money home to support families in Karachi and Lahore and Peshawar. Formal remittance services charge high fees, take days to process, require documentation that many migrants lack. Hawala is faster, cheaper, more accessible. It operates out of small shops in Riyadh and Dubai, shops that also sell phone cards and ship packages, unremarkable storefronts that are nodes in a network moving billions. Or consider Latin America, where systems called tandas operate on similar principles. Rotating savings and credit associations where members contribute money to a pool and each member takes a turn receiving the entire sum. No bank, no interest, just trust and social pressure. These systems have supported communities for generations, allowing people to finance weddings, start businesses, survive emergencies, all without ever interacting with formal financial institutions. The common thread in all these examples is exclusion. Hawala thrives where formal systems fail or refuse to serve people. Migrants, refugees, the poor, people in conflict zones, people under sanctions, people in countries with unstable currencies or predatory banks. For these populations, Hawala is not a criminal enterprise. It is infrastructure. It is how life continues when the official economy has abandoned you. And now, Hawala is evolving. Because technology is changing everything, including informal finance. Cryptocurrency enthusiasts often describe Bitcoin as digital gold, but a more accurate description might be digital Hawala. Bitcoin allows peer-to-peer transfers without intermediaries. It operates outside state control. It is pseudonymous. It is borderless. These are the same properties that make Hawala resilient. And predictably, in countries facing sanctions or currency controls, cryptocurrency adoption is surging. Venezuelans use crypto to escape hyperinflation. Russians use it to evade sanctions after the invasion of Ukraine. Argentinians use it to bypass capital controls. Iranians use it to access the global economy despite being cut off from SWIFT. But crypto alone is not a replacement for Hawala, because crypto requires internet access, technical literacy, trust in volatile digital assets. Hawala requires none of these things. It requires only social trust. And so what we are seeing is a hybrid. Hawaladars are using stablecoins, cryptocurrencies pegged to the US dollar, to settle balances instead of shipping gold or carpets. The social network remains the same. The trust mechanisms remain the same. But the settlement layer is now digital, faster, more efficient, harder to intercept. This convergence of ancient trust networks and cutting-edge technology is happening at the same time that trust in centralized institutions is collapsing. Younger generations, especially in the West, are skeptical of banks after the 2008 financial crisis. They are skeptical of governments after decades of dysfunction. They are attracted to systems that promise autonomy, that cut out middlemen, that return control to individuals. This is why Bitcoin has ideological appeal beyond its technical properties. It is not just a currency. It is a statement about decentralization, about opting out of systems you do not trust. But here's the paradox. Bitcoin is often called trustless, meaning you do not need to trust any person or institution for it to work. The mathematics and the distributed ledger ensure integrity. Hawala, by contrast, is all about trust. It is trust maximalist. And yet both systems serve the same purpose. Both allow people to transact outside centralized control. Both resist state surveillance. The difference is that Bitcoin replaces human trust with cryptographic trust, while Hawala amplifies human trust through social structures. One is a technological solution. The other is a sociological solution. And both are responses to the same fundamental problem: institutions that no longer serve the people subject to them. This is the context in which we must understand the geopolitical fracturing of the global financial system. For decades after World War II, the United States dominated international finance. The dollar was the reserve currency. SWIFT, headquartered in Belgium but heavily influenced by Washington, was the infrastructure through which nearly all cross-border payments flowed. This gave the United States enormous power. If you were cut off from the dollar-based system, you were cut off from the global economy. Sanctions were a weapon that could bring entire nations to their knees without firing a shot. But this power is eroding. China has developed CIPS, the cross-border interbank payment system, an alternative to SWIFT. Russia, after being partially excluded from SWIFT following the invasion of Crimea, accelerated development of its own internal payment systems. The BRICS nations, Brazil, Russia, India, China, South Africa, are discussing a shared currency for trade settlement. The world is fragmenting into competing financial blocks, and as this fragmentation accelerates, the demand for systems that can operate across these blocks, systems like Hawala, will only increase. At the same time, governments are pursuing total financial surveillance through central bank digital currencies. China is piloting the digital yuan, a currency that allows the state to monitor every transaction in real time. Other nations are exploring similar systems. The promise is efficiency and convenience. The reality is control. A government that can see every transaction, that can freeze accounts with a keystroke, that can program money to expire or to be spendable only on approved goods. This is a government with unprecedented power over individual lives. And so we arrive at a strange crossroads. Technology is enabling both total surveillance and total evasion. Central bank digital currencies and Hawala crypto hybrids. Institutions tightening their grip and networks slipping through their fingers. The question is which future wins? Or perhaps the answer is that both exist simultaneously, serving different populations with different needs and different relationships to power. Some scholars argue that informal systems like Hawala are parasitic, that they evade necessary regulation, that they enable tax evasion and money laundering and terrorism. Others argue that they are innovative, that they provide resilience, that they meet needs formal institutions ignore. Both arguments have merit. The truth, as usual, is more complex than either extreme. Hawala is not inherently good or evil. It is a tool, and like all tools, it can be used for purposes we approve of and purposes we condemn. But there is a deeper philosophical question here, one that goes beyond policy debates. What is money really? We take for granted that money is something governments issue, something banks manage, something regulated by laws and enforced by institutions. But historically, this is not true. Money emerged from barter, from trade, from social relationships. The tokens we use, whether shells or coins or paper or bits in a database, these are all just representations of trust. You accept money because you trust that someone else will accept it from you. This trust can be backed by the state, but it can also be backed by community, by reputation, by the expectation of future reciprocity. Hawala reminds us that money is, at its core, a social technology. It is a way of coordinating human behavior across time and space. The forms it takes, the institutions that manage it, these are contingent, not fundamental. And if that is true, then the idea that governments can or should fully control money is questionable. Control is always partial. It is always contested. Throughout history, whenever states have tried to monopolize currency, people have found workarounds. Counterfeiting, forgery, bartering, using foreign currency, creating private scrip, and in the modern era, using hawala, using crypto, using any system that allows them to transact according to their needs rather than according to state dictates. This is not to romanticize hawala. It is not a utopia. It has costs. The same opacity that protects users from surveillance also makes the system vulnerable to abuse. Without transparency, without recourse to courts, disputes can turn violent. Hawaladars who cheat can be threatened, even killed, because there is no legal mechanism to recover stolen funds. Women, in patriarchal societies, may have less access to these networks because they are excluded from the social circles where trust is built. The poor may be exploited by brokers who charge high fees because customers have no alternatives. Informal does not mean fair. It means unregulated, which cuts both ways. But for all its flaws, hawala has proven remarkably durable. It has survived empire. It has survived colonialism. It has survived the rise of the nation-state. It has survived the emergence of global banking. It has survived crackdowns and sanctions and technological upheaval. And the reason it has survived is simple. It solves a problem that formal institutions either cannot or will not solve. It allows people who are excluded, marginalized, or oppressed by official systems to participate in economic life. And as long as exclusion exists, hawala or something like it will exist. We are living through a moment of profound uncertainty about the future of money and the future of power. Institutions that seemed permanent are fracturing. Technologies that seemed impossible are becoming real. The boundaries between the formal and informal, the legal and illegal, the visible and invisible, these boundaries are blurring. And in this uncertainty, hawala stands as a testament to a simple truth. Human beings will find ways to cooperate, to trust each other, to build systems that meet their needs, regardless of what authorities permit or forbid. The merchant in Tehran makes his phone call. The cousin in London receives his money. No government sees it happen. No institution records it. The money has moved, yet nothing has moved. This transaction, repeated millions of times across the world, is not a glitch in the system. It is a reminder that the system we take for granted, the system of banks and borders and regulations, is not the only system. It is not even the oldest system. It is simply the most visible. Hawala operates in the shadows, but shadows exist only because there is light. And what hawala illuminates, if we are willing to see it, is the gap between how power wants the world to work and how people actually make the world work. It shows us that trust is more fundamental than law, that relationships can be stronger than institutions, that control is always incomplete. These are uncomfortable truths for those who govern, but they are liberating truths for those who must live under governance. The question we are left with is not whether hawala will survive. It will. The question is what it reveals about us. Are we moving toward a world where every transaction is monitored, where privacy is extinct, where states and corporations know everything we do? Or are we moving toward a world of overlapping, competing systems, where people choose the networks they trust, where power is distributed, where no single authority can dictate the terms of exchange? Or perhaps we are moving toward both worlds simultaneously, a fragmented future where different populations live under radically different financial regimes, where the wealthy and connected use seamless digital platforms and the excluded and dispossessed rely on ancient mechanisms of trust. History does not offer easy answers. It offers patterns, and the pattern we see with hawala is one we have seen again and again. When formal systems fail to serve people's needs, informal systems emerge. When authorities try to suppress these systems, they adapt and persist. The names change, the technologies evolve, but the underlying dynamic remains constant. People will cooperate. People will trust. People will find ways to exchange value with each other, no matter what obstacles are placed in their path. Hawala is not just a financial system. It is a form of resistance. Not resistance in the sense of revolution or violence, but resistance in the quieter, more enduring sense of refusal. A refusal to accept that exclusion is final. A refusal to accept that borders are absolute. A refusal to accept that institutions get to define the terms of participation in economic life. This refusal is not ideological. It is practical. It is born of necessity. But its implications are profound. Because if people can move billions of dollars without banks, what else can they do without institutions? If trust networks can outlast empires, what does that say about the permanence of the state? If coordination can happen without central authority, what does that mean for power? These are not abstract questions. They are questions that define the world we are building, whether we intend to or not. The money moves. It always has. It always will. The only question is who controls it, who benefits from it, who gets to decide the rules. And Hawala, ancient and invisible and resilient, suggests that the answer to that question is more open than we think. Not predetermined, not inevitable, but contested every day in 1,000 quiet transactions that no authority sees, in a web of trust that no institution can map, in the space between what is legal and what is necessary, where human ingenuity has always thrived.